Hey guys, good morning. It is Tuesday, Cinco de Mayo, hence the crazy jacket, May 5th. Very excited to have this investor mastermind group put together by the birthday girl of all things. Candace Griffin's birthday is today. Happy birthday. She organized this. She brought in this ragtag group of very smart people. There's somebody's phone's ringing. That's usually what happens to me. But I'm really excited about the topic. We've never done an investor mastermind before. I've done real estate ones, regular, but never geared toward investors. So I have a lot to learn, and I think it's going to be awesome for everyone else. So I'm going to start with Candace, of course. Just give us a little bit of background on you guys, what you do, and kind of where you're at as far as your involvement in this market. And then I've got a whole bunch of questions for you. So Candace, happy birthday again. Welcome. And we'll start with you.
Thank you. Well, I started out as a realtor in this space, and then I worked for NewView. NewView is a self-directed IRA custodian. I come from a family of real estate investors that they benefited greatly from the 2008 crisis. But this group also did, but won even more than my family managed to, just based on the knowledge that they had. Structuring things just a little bit differently, being more creative. It has some incredible benefits. So I thought, what a great time to bring this team together. So Jason DeBono with NewView with the self-directed, Greg Bond is brilliant. All of the property management stuff from then all the way through now, weathering every economic cycle we've had in Central Florida and turning it into a great profit for themselves and others. So Augie has made a huge impact on my life as an investor. I have no doubt that with his guidance and care that I'm going to be right there with these guys one day. So with that.
And we get to celebrate your birthday. I love it. All right. I am excited. I'm going to celebrate later, obviously, but we started it in your honor. I started the whole thing off. So let's go in alphabetical order. Let's see if I can do this right. Greg Bond,
Yes.
Introduce yourself. Tell us about you.
Well, started out as an investor in the 90s, early 80s and 90s. So I've been investing for over 30 years. Rehabbed about 250 properties over that time frame. I'm a broker as well. I recently got into, in 2016, got into self-storage and assisted living. So it's kind of my
Yes, you were on
background.
the show, and I listened to you talk, and it was fascinating. So
yes,
all these things I didn't know.
Love those opportunities, though, instead.
It was awesome. All right, how about you, Augie? Augie?
Well, I've been investing since the mid-'80s, so I guess I'm the elder statesman here. And I've seen a lot of different markets, from the tech crash in 2000, tax law changes in the late 80s, which caused a 10-year recession. Obviously, we've been through 2008 and that adventure. And now this pandemic is just another part of the cycle of life, of business, of economics. I've moved to Florida in 2003, and since I got here, I've been a principal in about 600, 700 deals. And I love this business. I own a trust company because I like to help investors keep what they own private and help them to structure their lives and businesses from a perspective of safety. I also have an education and training company, Creating Wealth USA, and we actually help people learn how to do things in this business that they would not learn anywhere else, simply because it is a money-based business, and it's a great way for the little guy to have a level playing field with corporate America.
Love it. Thank you. All right, how about you, Jason?
Hello, everybody. Jason DeBono with NewView. I started in this business right out of school in 2005, and I was completely new to both investing and self-directed investing through retirement accounts, and been fortunate over the years to surround myself with lots of smart people, quite a few of them that are on today's call, and kind of live vicariously through our clients. So we have over $1 billion of client assets that are all self-directed into non-public investments. So I haven't seen maybe as many of the ups and downs as Augie has, but I've seen, I started when things were crazy in 05 and 06 and leading into 07. And I saw when things were the opposite of that in 2008 and 9. I've seen clients change investment strategies. I've seen clients, make different decisions based on what's going on in the market. And I think it brings me back to where we are with this pandemic is there's really no better way than self-directing to give you the ability to pivot when the market throws interesting things at you. And, it's been fun to be part of that ride. And we're all learning a little bit in this pandemic process about what investing looks like. And we're already seeing clients change investment philosophies and capitalize on opportunities that are presenting themselves. So it's been a fun ride and really fun to watch.
Awesome. Well, welcome. And then last but not least, of course, Raul.
Hey, Ted, thank you so much for having me. Truly an honor to be with you guys today. Candace, happy birthday, and thank you for including me amongst this very talented and experienced group of investors. My story is pretty simple. I've been in property management for about 15 years. I started doing low-income management for a couple small multifamily properties of the Pine Hills area of Orlando. If you're local, you know kind of that area. In 2009, I started Belmont Management Group, which is a residential property management company, and kind of been at it ever since. We're now in our 11th year of management. I've been, I liked what Jason said. I mean, I've been fortunate enough to be around a lot of very bright minds, and I've learned a lot in the process of working on behalf of other investors who I highly respect and learn from on a daily basis. And yeah, so for the past 2 months, it's been interesting in our world, as you can imagine, not only from the initial expectations that we had as an industry heading into April, but kind of seeing a little bit of a shift and a change in how things are actually playing out on a weekly basis. So it's been interesting, it's been challenging, but it's also been extremely rewarding to utilize all the skills and everything that we learned over the past 10, 15 years in order to apply those into what has probably been the most challenging type of environment of uncertainty that I've had as a property manager, managing properties on behalf of other investors. So that's it. And so thank you so much for having me. And I hope to provide some insight, but some of the folks here probably definitely know a lot more than I do. That's for sure.
I think I'm low man on that totem pole, Raul. So you're going to have to just let me be that person. I'm going to learn from all of you. I think what's on everyone's mind, and Candace was kind enough to come up with some basic questions to help guide. So thank you, Candace. But I have to say that all the questions I got before the show, when I started to post and promote, they pretty much fall into the categories of the questions you sent, Candace. So you were right on the money. All right. So the first one is about the new normal. So we saw yesterday some of the opening, some of the reopening, so to speak, of retail and restaurants. And so I think one of the questions we had, and one that Candace created, had to do with what should investors do? What kind of advice do you have for people who want to continue to invest in the real estate world, given this new normal and what you see coming forward? And I'm going to start with Augie, if you don't mind, because I think a lot of people want to know, all right, so I'm feeling a little good. The government, obviously, we're opening up. I can see the light at the end of the tunnel. Now what?
Well, I think that's a great question. And while I don't have a crystal ball, I do have a lot of ability to look backwards over similar kinds of markets and similar kinds of situations. The one unique difference in this pandemic climate is that this was not something we did, per se. I mean, we may find out some country created it and sent it around the world, but if you go back to 2008, that was a financial crisis. It was caused by the banks, and eventually somebody said the king has no clothes, and oops, everything tumbled. Go back to the tech boom. People were buying stuff at 100 and 200 and 600 times earnings. Eventually somebody said, hey, the king's got no clothes, everything crashed. And both of those had relatively long recoveries. if you look, though, at this situation, if we get out of it within the next 60 to 90 days, I don't think there's going to be a significant impact in terms of employment and, you know, recovering and those kinds of things. If we go longer than, say, another 60 to 90 days, I think we're going to see the loss of some major corporations. And I think that will cause some unemployment. Whether that happens or doesn't, there is one thing that's absolutely certain. The federal government is going back to the well for another $3 trillion.
Amazing.
That's our money. It's being given to us by them, but they're borrowing it effectively from us and creating a deeper deficit. And the only way that's ever going to get recovered are by two mechanisms. Mechanism one is inflation. Mechanism two is taxation. And if employment does not recover, taxation is not going to do it. So we are likely to see inflation. And in an inflationary period, the absolute best thing you can own are hard assets. Back when Jimmy Carter was president, we had a massive inflationary spike. And I watched in a 7-year period, $30,000 houses go to $100,000. And it was funny because back in the early 70s, as a young guy, I was too proud, too ignorant, and too stupid to buy any house I could afford. Okay, I was a snob. And I would guesstimate my net worth is $5 million less today because of that. If you can buy real estate in this market and buy it properly, now what I mean by properly is not going to the bank for a mortgage, but learning how to structure deals with terms. And this is one of the areas that agents have a tremendous opportunity to serve their clients. If they learn how to create transactions that don't necessarily have to involve a bank, if credit disappears, it's no big deal. Okay, in 2008, banks weren't lending, were they? I found
Absolutely
it very
not.
easy, but I had 5 other ways I could buy properties without using a bank, without using my own cash or my own credit. And so, you know, we developed something called the wealth system, and it allows us with 6 simple steps to buy all the properties that we want and help sellers at the same time. And so the more agents that can learn this, the more investors, the more common people, the people that have exited the stock market. Okay, we've lost 1/3 of the value of the New York Stock Exchange, right? And how's that going to recover? Very slowly. Instead, people would be much smarter putting their money in hard assets. I'm not saying leave the market entirely, but you've got to hedge your bets. And in an inflationary cycle, I don't think the market will keep up with real estate.
Are you seeing the same thing, Jason DeBono?
Yeah, without a doubt. And, you know, what's interesting is Augie mentioned kind of those 2 things to recover, and one of them is taxation, and I agree wholeheartedly. And it underscores the value of a self-directed account. You know, there's I use a kind of a very simple example in a lot of things we do to illustrate what tax deferred or tax advantaged growth is. And, you know, if you take $1 and double it 20 times, so $1 doubled, you know, $2, $4, $8, at 25% taxation annually, that dollar at the end of 20 doubling periods, or 20 years, if you will, is about 75 grand. If you take that same dollar and double it in a non-taxed environment, so $1 truly becomes $2, $2 truly becomes $4, you have over $1 million at the end of 20 periods. And so the gap gets big, and if taxation goes up, obviously that gap starts to get larger and larger. So yeah, we're seeing a lot of clients that we have since we have since 2008 seen investors seek alternatives to the market, and people come to us not just because the stock market's down, they come to us because they don't want to play the roller coaster ride or the game of the stock market. And, you know, I think I can tell you just from looking at the you know, Yahoo page daily, what's unreal to me and makes no sense is, you know, the headline news is this big red breaking news banner that unemployment is over 20 million, you know, in a month, yet the stock market's up 1.5%. There's no rhyme or reason or logic behind it. And it's just hard to place your money into something like that. And so clients of ours, both pre-COVID and both through COVID, and we're starting to see it now. I mean, our phone is ringing off the hook with people that are saying, you know what, I'm kind of tired of this rat race in this fool's game of trying to figure out how to guess the stock market. You know, I'm going to find alternatives that can generate me return, like real estate, on an annual basis, where I'm living and dying by what I make annually, not by what it appreciates or depreciates. So a 20% drop in real estate, if it doesn't impact my rent, doesn't matter to me. Whereas a 20% in the stock market drop when I have no dividend, or they cut the dividend, which is the first thing to go, has major impact to me each year. And so we just see that behavior. We saw it in 2008. We're kind of seeing it's reminding people again. They got a little bit attracted to the easy money in the stock market that are saying, wait a minute, let me take some chips off the table. It's been a nice ride for 5 or 7 years. Let me go back to the fundamental way of investing, which is buy investments that can store long-term value, which real estate can, but also can generate income for you on an annual basis. And that's really the idea that I see behind real estate and notes and a lot of the alternatives our clients make.
Awesome. All right. How about you, Greg?
Yeah, I kind of echo what Augie was saying about hard assets. You know, you look at what's going to happen in the future by the Fed printing as much money as they printed, and what that's going to do to the value of the dollar. And I want all the money I can get into hard assets, especially with interest rates being as cheap as they are right now. So I know you've got a big contingent of agents and real estate brokers, Ted. So I would highly recommend agents looking into buying and becoming their own best customer. There's a tremendous amount of assets out there. I'm a student of Augie's. Went to Augie's Creating Wealth in 2000. What was it, Augie? 16, I believe. Mm-hmm. And then found NewView in 2009, and have been investing with NewView. And it's probably one of the most significant things I've done over the 30 years in real estate. So I know a lot of people. I'm sometimes shocked by how many people don't know that you can self-direct your IRA. So for any of you who are just hearing this for the first time, it certainly bears your time and effort to learn about that process. And I think there's some tremendous opportunities, especially when you look at taxes most likely going up. If you can do anything tax deferred or tax free, that's what I would be spending my time researching and looking into. And that's what NewView offers. So I highly recommend NewView. And for those of you who are interested in learning more about investing, Augie's program is certainly a wonderful program. So
awesome. All right, Raul, I didn't mean to leave you last but not least, but I didn't want to start with you again either. So how about you? What is your take?
Yeah, I mean, I don't think that there's much that hasn't already been said. It's been interesting over the past month and a half. I've heard from family, from friends who I've discussed investing in real estate before over the past several years, and all of them have been, not all of them, but certain folks have been a little apprehensive just because of how hot the stock market was and the amount of money that they were making out of it. So it's been interesting to see a few of these folks kind of reaching out as of the past 6 months. I mean, as of the past 6 weeks, asking about real estate investing. And mostly looking for cash flow. I think that to me is the power of real estate, just the simplicity of it. It's a very easy concept to grasp to the average investor. Perhaps it's not, very, very stock savvy, or doesn't have a lot of time to be actively trading, etc. Just the fact that you're able to drive by your investment, knock on the door, and have someone there paying a third of their income to you in rents. Is pretty powerful. I would say that now we spend a lot of time also speaking to real estate agents, educating real estate agents, because we do believe that that's for them to work with investors is a huge opportunity for them to grow their business. We provide free consultation on rents, but essentially real estate agents are able to more or less educate their clients and kind of turn them into recurring customers in the purchase of investment assets. I think there's a huge benefit for them to do that. And then in turn, partner with folks like NewView in finding those strategies that are going to better provide the best results for them. But I think overall that would be my message to agents at the moment. Just spend a lot of time educating clients and just kind of creating that pipeline of folks that are interested in investing in real estate and are going to continue to be recurring clients for their business. So,
thank you. All right, Candace, I don't want to, leave you out. Do you have any thoughts as somebody?
I do.
Okay,
I do.
good. I want you to have thoughts. That's good.
So layman's terms, guys. Okay, so real estate's an asset class, right? It's just one that does not. Yes, it has its ups and downs, but at the end of the day, it's the longer you hold it, it comes back. That is not true with stocks, right? That is not always true with stocks. A company goes down, you can't go get a toaster out of that building, right? And there goes how much of your money? We've seen what's happened to some of the giants that we know and love right now, like Disney, for example. So just remember, hard assets like real estate are something that are, in my opinion, much safer, period. I know more about it. It's easy to know more about it. I could see not wanting to get into it maybe at a certain point in your life, but think about owning a home in your IRA, right? Or your 401k. It receives rent every single month. It still holds a certain value, right? So that cash flow can actually just come right to you if you're even in retirement and you're still maintaining the balance of your account mostly, right? Depending on what the market does, but it doesn't vary daily. You're not losing sleep over it, checking your phone or avoiding checking your phone. So it's just, it's powerful and it's something everybody needs to know. I know this because every time I bring it up, everyone's completely shocked and wants to know more, but also kind of confused. So, yeah.
All right. So I like your perspective because you're sort of new to the game, right? Newish compared to these experienced guys. Me too. So you're way ahead of that curve. But I had the majority of the questions come in kind of from a new person's perspective. And so let's say somebody is watching this for the first time and they came to the show to hear you guys talk about investments and real estate, and they're first-time people. They haven't done anything in real estate as far as an investment. They own their home, but they don't have any kind of investment properties, whether it be residential, multifamily, what have you. So given the current market, can you all give them maybe a 1 or 2 step advice? I use that word lightly because I know a lot of people don't like that, but can you give them your insights on maybe what they could do, what they could look at, maybe some of the first steps to take so that they don't make the mistakes that maybe you all made when you were first started out? And I'm going to start with you, Greg.
Yeah, I guess, Ted, I would say look for somebody experienced, right? Look for a mentor that could kind of walk you through, even if you partner with them on the first deal, just getting that experience is invaluable to help and limit those mistakes. You're going to make mistakes, and I think that's a good thing. Unlike school, making mistakes, you learn more from your mistakes than anything else. So I say go out, make those mistakes early. Just make sure they're not too big of mistakes, and find a mentor and somebody that's been through this before and can help you navigate the property asset class that you're looking at. I'm currently building an assisted living facility in Eustis, Florida, about 100-bed facility. It just happened to fall in an opportunity zone, so I became a huge proponent of opportunity zones just because of the tax benefits. I love anything that's tax deferred, tax free, and the opportunity zone program hit that for me. So I quickly learned everything. Well, not everything there was to know, but a lot about opportunity zones. And again, it'd be something that I would highly recommend people look into, would be properties in opportunity zones.
Yes, I learned a ton from you on the opportunity zone side. So we definitely have to, I would like to talk about that if we have time, but I want to get to everybody. Raul, I don't want to make you last again, so I'm going to ask you the same question. This is my moderator job going really well, as you can tell.
Yeah. Well, I share Greg's thoughts on this, and I think nowadays we live in a world where information is readily available as long as you want to learn. From podcasts to Bigger Pockets to mentors, meetup groups, etc. Like, people are actually eager to help others succeed. At least that's been my experience. I've again learned a whole lot from folks that are way smarter than me, well more experienced than I am, and that's helped me along a lot along the way. Now, I think again, mistakes are going to be made. So I think the main thing is actually educating yourself the best you can, but understanding and not being too hard on yourself when those mistakes do happen, and actually do learn from them. From the perspective of from education, I think it's important. One of the things that I've learned, and that's been especially true over the past 6 weeks as we started going through COVID-19, is the investors who carefully did the underwriting of their deals, who did a lot of stress testing of their deals, etc. Those were the guys that when I was speaking to them, even heading into April, seemed more at ease, just because they understood their risk level and they understood what they were looking at in case of bad as we thought from our perspective and rent collections, etc. But those will be the main things that I would say, is definitely educate yourself, podcast, and definitely find a mentor, someone who's willing to help you. And there's plenty of folks out there who are willing and interesting to do that for young investors that are just getting in the game. One of our
Amanda said CFRI has many classes. There's a lot of opportunity out there. So what they're saying, I think, is 100% on. When I first got into anything investment, I went to IRC. I don't even know if that exists anymore, and then CFRI just to learn. How about you, Jason?
Well, I remember IRC, and certainly CFRI has been a big part of my life over the last 15 years. Obviously education is key. I think people use their phones at their fingertips to answer, random trivia questions at dinner with another couple, but they probably don't open it up near enough to simply look and say, what does investing really mean, and how do I generally make money? So, Raul mentioned, it's without a doubt the information age is upon us. We just got to use it in the right manner, and there's lots of great information and great mentors out there. So certainly echo those sentiments. The first deal I ever did from a real estate standpoint was I went out and a friend of mine and I, we bought a duplex, and we paid $60,000 for a duplex, and it rented for $550 on a side. We got a mortgage on the property, and we had a mortgage of $600, PITI out the door. And so when you step back and, we were novices, we were just out of college, we were wet behind the ears, thought we knew everything. And the thing that we learned, and I had learned a lot in asking questions and being around smart people, was when you sit down and you crunch the numbers and say, okay, we put $10,000 into this deal, $5,000 each. We have a $600 mortgage. So in the event that we have no tenants, right, it's $300 a piece out of our pocket. It wasn't going to change our lives. It rented, around $550, which was the going rent then, and that over time increased. And we knew that if we could rent half the duplex out, we could basically cover our payment. And if we rented both sides, we started to make money. You don't have to be a rocket scientist or a genius or an investment guru to look at that and say, the numbers work. And so I think, when we talk about real estate now, if I take that same idea and would have sat down with my friend and said, let's take 10 grand, $5,000 each, and let's figure out how to go evaluate a stock to buy that's going to generate what that could or would or should generate. You have to have it. You have to be a rocket scientist. And even then, last time I checked, nobody in the financial sector reports the news before it happens, they all report what happened after it happened. And, you know, by my standard, that doesn't make you an expert. That simply makes you a reporter. So, you know, I look at that and think, I won't say it's so easy anyone can do it. Obviously, that was a successful investment. I have unsuccessful investments that I could tell you stories about as well. But as has already been said, you learn a lot from those. And there's no reason to not get out and take a look. And I think I'll wrap this answer up with this, which is, you know, Ted, you kind of brought up the new normal. And so what I would give, and we're not in the business of advice, but I would give as clear advice to everybody considering entering the investment world today, is to understand what that new normal is. You know, what is a property that people want? Where is the sweet spot of rental today? It may not be the same as it was yesterday. What happens if, to Augie's point, this lasts longer than 90 days? You know, what happens if it doesn't? And so I think you can not necessarily guess correctly, but I think you can give a decent amount of idea that we know what the impact and fallout could look like the longer that this goes on. And so where's that going to hit the hardest? And I think there's great investment opportunities in a growing market, just like there are in a declining market. And now's the time to ask yourself what that market may and will look like going forward. And use that along with some basic, you know, back of a napkin math skills and opportunities.
Great. Thank you. All right, Augie, last but not least.
Well, I'm going to take a slightly different approach. Yes, you do need knowledge. Start here. The Financial Freedom Formula. It's $10 on Amazon. I wrote this exactly for this reason, so people could get an idea of how to start thinking about real estate. And the first thing you need to do is think about why you want to do real estate. What is the objective that you're trying to achieve? Because there are many different outcomes that you can create using real estate. You want to replace income. You need current income, because if you don't need current income, then you can create deferred income. You can create deferred growth. You can create tax advantages. You can create tax deferred growth. And working with someone like NewView, and I've been working with them for about 15 years. Actually, I think I was their client when Jason was interning. So even before he actually formally joined the organization. And I love NewView because they've helped me to keep more of what I've made. You know, any business you want to go into, go get a job, do real estate, go say, well, you know, welcome to Walmart. I don't care. You have a partner in that occupation. It's Uncle Sam. Okay. And Uncle Sam does not add a lot of value to my business. So I believe, and you should believe too, that we should all pay taxes, but not a penny more than is legally required. But more important than the tax question is really, what is it you're trying to achieve? That's the first decision you have to make. Okay, because that's the thing when real estate gets challenging, that's going to keep you anchored. This is not a quick wealth or, you know, get rich quick scheme, but it can be a get enormously wealthy slow scheme. Okay, if you're looking to get rich real quick, try the racetrack, try the stock market. But if you want an almost 100% guarantee of a wealthy finish to this life, real estate is key. And you just have to decide why you want to do it, and then you can build a plan around it. That's step 2. Okay? You can talk to Greg, you can talk to Candace, because they both worked with me as their mentor and their coach. And the first thing we talk about is structuring their plan. But the plan's got to be structured around goals. What are you trying to achieve? When you lock that in, and that can change over time, but you've got to have a starting point, because that's your anchor. We do lots of training programs. We have a free one coming up, and maybe we'll talk about that.
They
later.
Want to know the name of the book again, Augie. Hold on, hold it up.
It's the Financial Freedom Formula.
Wonderful. All right,
Okay?
Thank you.
It's one of 2 books that I've published, and the other one is after you start creating some financial freedom, it's how to keep it safe.
All right, so the question that a couple people already asked in the feed and had been asked before, you know, it's good to stand up. Oh, Candace, I didn't get yours. I'm sorry, honey, you go. I'm so fascinated, and I'm not paying attention better.
You're fine.
Go
Keep
ahead.
going. going.
You sure?
You're
All right. All right. So I have, yeah, just interrupt me. You can't knock me in the back of my head, but please interrupt me.
I'm not shy.
So the questions that have come up and came up before is, okay, all that aside, you guys are obviously incredibly smart gurus in your field. You know what you're doing. You have the proof in the pudding. People want to know, take that, and they want to know, okay, so given the pandemic and given the reopening, what are you personally doing in your own personal investments differently, if anything? And I'm going to start with Jason.
Awesome. Great question. And I'll start by saying, I personally and the people that in my inner circle that I work with from an investing standpoint, I think we're all trying to figure it all out, just like everybody else. So, the fact that you may see us as kind of what we are today, there's no one on this panel, and you have lots of experience, that can look back and say, the last time we went through a pandemic, this is what we did and how we survived it. So, make no mistake, we're all novices in this process, and we will be for some time. I'm looking at hard assets like I always do. I actually took what little bit of money I had in the stock market and liquidated it, a month and a half ago. And in some ways, if you look back, you think I'm an idiot. Because I think the market's jumped 25-30% since I sold it. But man, do I feel really good at night knowing that it's not going to be gone overnight. And I'm also poised, to have a little dry powder to go out and tackle some investment opportunities. So my philosophy probably won't change a whole lot than it always has been, and probably always will be, and that is accumulation of assets. I like assets that I'm well protected in, and I like assets that pay for themselves over time. A combination of those two things. So the two things I've done, probably with 80% of the investable assets that I've had, have been private lending and real estate. I only buy income-producing real estate. That's just my own personal opinion. It's the only way that I know that regardless of whether the market grows or declines, people always need to rent. And while there may be some short-term disruption with a particular tenant or a COVID example where people have been laid off, it all works the same way. It's short-term, meaning people can't pay for a period of time, but there's always someone that can, or a way to work with those tenants to help them be able to pay. So I love rental real estate, and I'll continue to be pursuing that even in an upswing or a downswing. And then private lending. I look back at some of the private loans I've done over the years, and we don't try to lend to the market of investors that can go out and obtain traditional financing, because we can't compete, nor is it price. Is there any value from our perspective to do it as investors? But for those of you that are agents, if you have clients that maybe TED can't get approved, or they're running into issues, or maybe they've lost their job temporarily, or what we'll likely see going forward is restrictions that banks are putting on because they have capital issues that they're going to be facing. They're going to be writing down assets. As they do that, they have to start tightening their belt around what they're willing to loan to. So we wrote some of the best loans that we've ever done in 2008, 9, and 10. And I would anticipate some of the best loans that lie ahead for me and what I do will probably be in 2020 and 2021.
Excellent. Oop. All right. I'm going to go to you, Augie. How about you?
Well, in terms of what I'll do differently, we've been pretty disciplined through the various and sundry markets we've been in. And if anything, I always look at what my exit strategy is going to be for a property. I still buy, fix, and sell, and I buy and hold. Those are the two primary things that I do. And the reason I do that is because I don't know when I get a lead or talk to a seller how the deal is going to come to pass. And so based on how I buy it is going to dictate what I'm going to do with it once I have it. So if I'm going to buy it and I'm going to pay cash for it, whether it's my cash or whether I work with someone like Jason and I borrow the funds and help him get a good return on his investment capital, well, if I do that, I'm going to turn around and resell the property. So in those cases, I'm buying at about a 10% additional discount than I would normally seek. As far as those that I want to buy and hold, I use two strategies. One strategy is seller financing, where I'm not as price sensitive because I'm going to pay the seller in installments. It's going to be an installment sale. So effectively, they will become my bank. And in those instances, I'm going to hold those for rental because we're going to agree on a payment that will allow me to cash flow the property. And I'm going to be happy to give them a price that's more than fair. The other way I'm going to acquire properties is by taking over payments on existing mortgages. And I know there'll be a lot of questions on that. We'll save that for another time. How do you do that? But the fact is, we have, in the last 7, 8, 9 years, we have had some of the lowest interest rates in history. And some of the people that have those interest rates are going to struggle. They will have lost jobs. They will have gone through a divorce. There will be a sickness. There'll be a relocation. There'll be some reason they absolutely positively must sell their property, and they must sell it quickly. And in those cases, we have a structure by which we can take over their payments, even restore their payments if they're in default, and keep the properties current until such time as we may pay off that existing mortgage or sell it sometime in the future and pay off that existing mortgage. So those are the two strategies that I'm going to use for my buy and hold properties. Okay, if you notice, in neither case do I have to sink a lot of money into those buy and hold properties. And so I'm getting the maximum yield on my own capital. So I always, one of the things I measure deals with is my cash on cash return. Okay, if you look at Jason's cash on cash return, when he said he put down $10,000 and he was probably netting somewhere around $500 a month. Well, that $500 a month is how much? Think about it. It's $6,000 a year. If I divide $6,000 a year by the $10,000 investment, that's a cash on cash return of about 60%. Show me that in the stock market.
Agreed.
Okay,
right,
so
go ahead. I'm sorry. Nope, I'm listening. I thought you stopped, Augie, and I thought, okay, that's it. That's Augie's cue to me that he finished his statement.
No, well, that's okay. It actually was, but then the thought with Jason came up. You know, I don't look at this just as a real estate business. It's a money business because real estate is an asset class through which tons of dollars flow. And if we can find a way to siphon off some of those in a tax efficient manner, that's good. If we can find ways to siphon off more of those in a tax efficient manner, that's better. And that's exactly how we build wealth.
All right. How about you, Greg?
Well, I look at any type of situation like we've just gone through creates opportunity. And so I want to be able to take advantage of the opportunity that presents. So I've been trying to keep some powder dry, thinking, 6 months from now, there is probably going to be a tremendous amount of opportunity. So for any agents out there, Ted, I think they should be educating themselves now, like Raul said, with podcasts, with books, any way they can educate themselves and getting ready for that opportunity that's going to present itself. I think we become so used to low interest rates, and at some point that is going to shift. I don't see any way around that. So when that shifts, it's going to make us look like we were brilliant for all the loans we took out at 3% and 4% and 5% when those loans start to skyrocket. So I'm just excited about what's going on. I'm continuing to purchase. In 2016 is when I took a look and said, I love everything to do with real estate, but I want to jump into some different asset classes. That's when I really started to research different asset classes, and I wound up in self-storage, like and assisted living, and I'll continue to purchase more of those asset classes. I do have just like Augie, I have a book. It's
Hold on, let's put it up. There you go.
A senior planning guide to help the elderly. We see so many times the elderly are taken advantage of. And so we want to do our part to help educate the elderly. And the book is just basically an attempt to help the elderly look through the opportunities in the situations that they find themselves in, and to think about those before they actually get into them. Because when you're dealing with a death of a loved one or a major medical issue, that's not the time to be thinking. You're not thinking straight. So the time to kind of work through that is before they happen. So it's home to home.
Home to home. Wonderful.
And it's a great planning tool for families.
I'm sorry, Augie?
It's a great planning tool for families.
Yes.
There you go, Raul. You're up.
There you go. Yeah, some difficulties here with the connection. It seems like.
We can hear you.
Okay, to ask. Can you repeat the last question? Yes. I was in and out of the chat.
That's fine. Just what's your personal investment approach during the pandemic and coming up? Has it changed at all because of the pandemic, or are you just business as usual?
That's a great question. I mean, I don't think business as usual would be what I would say, but I think from my standpoint, it's really kind of keeping, going back to the basics and really understanding, as I mentioned earlier, that spending a lot of time in the underwriting of the deals and really understanding what the deal looks like, not when things are great, but also when things get to where we are today. And even if things, as I mentioned earlier, are not from the perspective of rent collections, what we've seen, they're still coming in. So it hasn't been as bad as we initially anticipated in late March. It does reinforce the fact that stress testing every single deal that you look at, and not just falling in love with the deal, but actually really understanding what happens if I have to go down to 60% vacancy? What happens if I have a month and a half, 2 months of no rent payments? What happens if there's federal, halts and evictions? So if you kind of take all those things into account, I think that's the main thing that I'm taking away from the current situation. It's really kind of patience and really understanding when it is a good time, when it is there. I think we've all had great deals that they just felt right from the very beginning. And I think a lot of it has to do with that, a real understanding of where you are in the market and being patient and not really jumping on things just because you fall in love with the property and you think it's going to be great, but really understanding the basics of the numbers and what stands behind them. And again, continuing to surround yourself with education and folks who know a lot and are going to help you along the way.
The mentors. All right. Candace, I'm gonna the birthday girl. I'm gonna let you kind of wrap up because we are toward the end of our time. What about you? What are you doing differently? What are you seeing differently? What are you experiencing? You've been mentored, I know. But you have great information, so don't sell yourself short.
You're very sweet. I'm taking my time, so I kind of jumped into a certain strategy and figured out that I was missing a piece of due diligence, and then relied on my mentor for the sage advice that I got a mentor for, right? So, just really seeing it less as a get rich quick thing and seeing it more as, wow, probably in 5 years, I'll be killing it, right? The more I talk to investors, the more I talk to people that have been there and done that. I mean, of course, there are some that they just hit it out of the park right out of the gate. But many stumble, and that's why it's so important to rely on people that have been there, done that, had those experiences. Education is everything. I love Real Estate Radio Guys podcast. I love Bigger Pockets podcast. Property management podcasts. I love learning from Raul because he's it's a whole new world for me, this property management stuff, and hearing what it was and what it is, and knowing that it's a fascinating world, knowing that you can sort of help your tenants mitigate all of this. You give them resources. He's so seasoned, right? He's able to give them resources that the average landlord would never have available, right? So before all of this really hit the fan, he was already compiling, his team was already compiling resources for tenants to use to help them sort of stay afloat through all of this. And then those conversations that you have to have with not only the tenants, but the owners of these properties. I mean, it's all very delicate and you really have to have experience, I think, to do it right? And to pull it off and have the best possible outcome. So that's what I'm really having a lot of fun learning about now, just watching how Raul handles all of this with Belmont. And then, you know, Augie has that event coming up in May. It's normally in person and it's normally expensive, but he's doing it virtually and he's doing it free because he's a man of service and he loves everyone. Like you just know it. Like whenever I've been to so many of these things, whenever I was sponsoring events with New View, and Augie, he's really different. So if anybody takes the time to get to know his strategies and his approach, and he's local, you'll really be doing yourself a favor. And Greg, I mean, he's just brilliant on everything. Everything he tries to do, he does well, and then goes on to some other thing that he's going to just blow out of the water. So he's another one that if you get the chance to be around or listen to, do it, right? And then New View has free classes constantly. I mean, right now, of course, they're not in person like they were before, but they are virtual, and it'll change your life. I don't care what you think you know about investing, real estate investing. Even if you think you're a sage at it and you don't know about that, you're absolutely missing out. You are missing it completely. I know from my family's experience with it, it's doing the same thing, structured a little bit differently, and winning so much more. So that is why I wanted to bring this to you guys today. These people have made such a big impact on my life, and I coming from mainstream real estate, I just always thought there needs to be a way to sort of bring this information to the people. Like, not enough people know about this stuff. So do yourself a favor if you're interested, and take some time to learn about it, because we have a little bit of time right now.
All right, so we're out of time. So what I'm going to do is encourage each of the guests to share their link to their page when you share the show, because we have a lot of people asking for the links and how to buy the books and how to find out more information about New View and how to reach out to Augie. And so each of you take the show once it's over and share it, tag me, and make sure you put whatever contact information you want in there, because you have a lot of people who want to ask you questions. So you guys are a joy. Thank you so much for being on. Candace, happy birthday again. Thank you so much for putting this together. Lots and lots of great information. I'm going to have to go and have another quote unquote cup of coffee to kind of let it digest. But I appreciate you all taking time out. Thank you so much. All right. So Candace Griffin, Greg Bond, Augie Byllott, Jason DeBono, and Raul. Yeah, Raul. Raul Veitia.
Raul Veitia.
Okay. All right, you guys are awesome. Thank you. Share all your information with these guys. Thanks so much, Candace. Happy birthday again.
Thanks, everybody.
Thank you, Ted.
Bye, guys.
All right.
Bye-bye.
Have a great day, everyone. Stay safe.